This podcast is being provided for informational purposes only. The ideas and opinions expressed on this show do not constitute legal, tax, or investment advice or a recommendation of any particular security or strategy and do not represent the opinions of the underwriters of this programming. Any information prepared from third-party sources is believed to be reliable, though its accuracy is not guaranteed. Opinions expressed in this commentary reflect subjective judgments of the speakers based on conditions at the time of recording and are subject to change without notice. Listeners should seek the input of their own financial, tax, and legal professionals before acting on any of the information provided.
Hey, I'm Aaron. I'm one of the founders of Deliver That.
I'm John, other co-founder of Deliver That. Welcome to the Founders Series.
Founders for life.
So, Mitch, you have OCM. What is it? How did that start?
Yeah, sure.
Where did all this begin?
So OCM Private Wealth is actually a recent spin-off of Objective Capital Management, which was the OCM initials. I joined OCM about 6 years ago in March of 2019.
Okay.
From a career, about a 15-year career working in with large banks, brokerage firms, and finally wanting my independence and autonomy and to create my own path and story. And I joined with two original partners. At the time was Objective Capital Management, which still exists. Recently, about 6 months ago, maybe a little more, 9 months ago or so, we spun out a new entity, OCM Private Wealth.
Okay.
Myself, a partner from Columbus and a partner from Chicago.
Yep.
Really with the goal being to pursue some new initiatives in the alternative investment world, to expand our team, make some hires, and really pursue a lot of growth avenues that weren't in alignment with some of the goals of the original partners I had in the business.
Sure.
So OCM Private Wealth was this new entity spun out of Objective Capital Management.
Okay. And the original Objective Capital Management, normal wealth management, stocks,
very much
mutual funds, ETFs, stuff like that, right?
Yeah, so Objective Capital, OCM, which is still very much the core of our story, is a registered investment advisor, which is really just in our world, in the wealth management world, is really just an independent firm, where you're not part of a larger institution, whether it's a bank, a traditional brokerage firm or wirehouse, or some of these larger regional type of firms. You have your own independence. Most of these firms will affiliate with a custodian. In our world, that's Fidelity. There's others out there, Schwab, Pershing, a lot of names that you'd be familiar with. Fidelity is who we landed with. They are essentially our platform, our technology, our back office, a lot of our support. That is where our client money is custodied and lives. Anyone who has a relationship with us, it's really a relationship with Fidelity, that we're the firm managing that and overseeing it. So yes, at its core, we're very much generalists. We do traditional financial planning, wealth and asset management, help our clients with philanthropic planning, estate planning, and advising in any and all things related to their overall financial picture. As we continued to evolve and gain new interests, it's really the alternative investment space where we had been participating, but doing a lot of very, types of investments and opportunities that I would now consider table stakes or very common. That's how we gained access to that for our clients for the last 5 or 6 years. And I would say in the scheme of things, we were fairly early adopters to that space. But in an effort to continue to always want to be innovative, forward-thinking, differentiated in this world, we wanted to take that alternative investment platform one step further. And out of that was born this new entity, OCM Private Wealth.
Okay.
And by no means is this financial advice. Anyone listening and watching, okay? Not even in the slightest.
Thank you for that,
Aaron. You talk about, a lot of people don't understand like what alternative investments might or might not be. can you kind of, like we talking Bitcoin here? Are we talking, like Dogecoin? Are we talking
whiskey?
Businesses like Deliver that are like privately held, but like you might have it in with a private equity group. Like, can you elaborate more on like number one, why there is this demand for like these alternative investments, and two, why is it table stakes now that you have to offer this?
Sure. Yeah. No. Great questions. We'll start with because alternative investments, that's become a very common phrase in our industry, in our world. And in my opinion, what that encapsulates and includes, that would be everything from private equity, private credit, private real estate, your more esoteric types of investment opportunities and assets. Yes, an investment in a company like Deliver That. Really anything that's not traditional, not your typical broad asset class of public equity, fixed income, bonds, cash type assets, really falls under that world of alternatives. And frankly, until recently, I'd say in the last 5 or 10 years, there's been this massive wave of what I would call democratized access. Historically, these alts and these private markets have been around for the last 30 so years, plus or minus, but they've historically been dominated by institutions, endowments, pension funds, ultra high net worth individuals. Really, you're talking the family offices that almost invest and compete alongside institutions. That is who has dominated this. It's not a mystery as to why Harvard and Yale's endowments have become these poster children for portfolio performance and what they've been able to achieve. A lot of it's because of their access to alternatives. Don't quote me on this, but I know at any given time they'll have 30, 40 or so plus % in alts. And so what's happened in the last 5 or 10 years, a lot of this alts access has opened up and not watered down, not diluted, not some copycat product, but actually true access through various third-party platforms. You've heard of the iCapitals of the world.
Yeah, there's tons now.
First Trust. We happen to have a great partnership with Case. That is our primary alternative platform. And what these firms are doing is they are opening up access to these same types of opportunities, whether it's large PE funds or real estate opportunities or hedge funds or other private direct offerings to firms like ours and to our clients. And you have a world where you used to need, if you could even get access, a $10 million minimum check size into some of these deals. Now your average accredited or qualified client can access these for $100,000, $250,000 minimums. And it's really levelized the playing field. And to follow up on your other part of your question, Aaron, is the demand and I guess really need for alts access for your average high net worth client is the asset class has such compelling risk reward characteristics and performance over the last 2 decades. Oftentimes alts, and it's a common mistake, a lot of times people think that alternatives are synonymous with more risk and higher risk because of the higher reward and return profile, and that's not the case. Obviously there are venture and seed and early stage type investments, which is a type of alternative, but a lot of these larger blue chip private equity funds, diversified funds, and a lot of these opportunities can offer very, very stable returns, and in many cases a lot lower risk profile than public equities, but have historically offered significantly better and more compelling returns. So that is where client demand is increasing. I'd say average investor awareness of this space and education around these opportunities is increasing. So a firm like ours, you have to be equal parts willing to evolve, but then also capable of that evolution. But in our opinion, if you're not seriously exploring alts, the world will pass you by. and it's a great way to future-proof your business in our world.
Yeah. I mean, as you can go to ChatGPT and say, act as my Goldman Sachs advisor, what would you invest in?
Well,
you might get something back that's pretty decent. And do I want to go pay a piece for access that I already have?
well, it won't be long before, and when I say a lot of this has become table stakes, I don't think it'll be long before your robo-advisor or your Robinhood account or your SoFi account, will you be able to participate and get access to a large PE fund's next vintage and almost crowdsource, if you will, access to the Apollos, the Blackstones, and the KKRs, which 5, 6, 7 years ago, that was really nuanced and exciting.
For sure.
For us, our challenge is always, because we want to be at the forefront and innovative in this space, is now taking it one step further. What do we do to differentiate ourselves, and how do we find, source, and bring our clients opportunities that are truly unique and differentiated and that you're not seeing elsewhere?
Yeah.
How does the world of automation, and I don't like to call it AI because I don't believe it's truly AI. I think it's machine learning at this point. There will be AI, or AGI, I should say, but where does this intersect with what you're doing, right? Like how do you interpret what's happening in the world right now? I mean, for me, for example, like when I look at this business, there will be a day sooner than I think where there will be self-driving cars that are picking up food, not picking up the food, but a restaurant, operator comes outside, puts the food in a car, that car drives away, goes to a destination, the customer comes outside, picks up the food. And there's unfortunately, no delivery driver in that equation. Like, that's what's coming down the pipeline for our business. And so how are you thinking about how machine learning and AI is going to really impact, if at all, what you do? How do you view, the competitive advantage it has over yours? Are you worried at all?
Well, look, I don't think that there's an industry out there that can't, to some extent, some more significant than others, be disrupted by AI. I think at some point there's going to be a divide where you have the folks that buy in and adopt it and learn how to leverage it and use it to their advantage, and others that are either late to the game or don't embrace it. And I think it's going to be an uphill battle and a struggle for those folks. That is why, to your point, the AI will continue to help, I think, democratize access more and more. And that's why when we think about how do we future-proof and AI-proof our business, particularly from a deal sourcing standpoint and an opportunity standpoint, it's not just shopping the platforms that are providing this to a mass audience. It's really developing personal relationships with, whether it's family offices or groups that can source truly unique and proprietary deal flow that a robot will not be able to generate access to for our clients.
Yeah, no question.
And what can we be doing to constantly stay ahead of that and not be replaced by a robot or an algorithm, or, to your point, ChatGPT, build me an alternative investment portfolio allocation.
Yep.
It's a struggle, and you have a lot of firms that are embracing it. They're moving as quickly as they can, but a lot of firms in our world are not too nimble. They've become massive behemoths, and this evolution happens slowly within a culture, within a firm, but you see the outside world evolving at a much, much, much faster clip.
Yep.
Do you have an opinion on when that day might hit where it's like, wow, the robo-advisor is here? Do you have a time or a day you think of?
The robo-advisor's been here. When I first heard about it, it was, this is probably going back, 6, 7, 8 years ago, the wealth fronts and whatnot. And it got your attention. But then what I realized is that you can't call a robot to pick its brain. A robot's not going to call you to bounce an interesting idea or concept off of you. So I think, look, for someone who wants just really low cost, indexed kind of basic advice for a basic core portion of their portfolio, I think that a robot can have some value and can help deliver you that solution. I don't love saying that. I don't love that it's here.
Sure.
I think what I am less convinced of is that the robot, though, will be ever able to replace some aspects of a deliverable from just a quality of advice, access to opportunity and solution, and frankly, just that human touch and that human element of wanting to do business with someone that you like and trust, and are confident has your best interests, and will always keep your best interests at the front of what they're doing. That's where I think it will be hard for robots and AI in our world.
Yeah, I mean, it's like this, necessary evil / probably the biggest technology advancement since the internet. It's like, it's scary, it's intimidating, but it's going to happen whether people like it or not. But anyways, enough about AI. Let's take a couple steps back and talk about your background a little bit. Like, where are you from in the area?
Yeah, sure. I grew up in Shaker Heights, Ohio.
Nice.
Love Shaker. I've always enjoyed. I had a wonderful childhood there. Went away to college. Went to the University of Michigan, and then don't hold that against me.
Ben probably loves that.
I prefer that over the Team 2 Hours South.
Can't even say them.
Perfect.
I have no opinion on it. So.
So spent 4 wonderful years in Ann Arbor.
I mean, beautiful campus.
Yeah, beautiful campus, fun town, great town. We make it back quite a bit. Season ticket holder.
Nice.
Get to some football games. I've started doing some work with the university, actually mentoring students. I spent 4 years there as a history major. Due to a little too much fun, maybe my freshman year, I did not get into the undergraduate business school. It ended up being a blessing, probably the best thing that ever happened to me. I majored in history, which was just a passion of mine and a subject matter I was interested in. And really got to about March of my senior year, this is 2005, with no idea whatsoever what I wanted to do.
Yep.
I looked at an inside ticket sales job with the Cavs.
Okay.
I think I would have been making like $28,000 a year, living in my parents' basement,
Yep.
shooting the T-shirt gun into the crowd during games. It actually
Never
sounds
caught one of those. Never had.
Well, I think it would have been really fun. I just really didn't want to necessarily come back to Cleveland right out of school. I was looking at some bank rotational programs. I was interviewing. I was looking at everything. I had no idea what I wanted to be when I grew up. And someone somehow got my resume at the time it was American Express Financial Advisors. And I had a former boss there. Can I say people's names?
Yeah.
Can I name drop it?
Yeah.
This was an early mentor of mine. He's fantastic. Josh Rogers was his name. He now has a wonderful firm he runs out of Chicago. He was my first boss, my first mentor, and has remained a close friend and mentor. And he had this belief. He went to a small liberal arts school out east, and he had this belief that he wanted to go out and hire humanities students. He only wanted to focus, and he was building out an office for American Express, which shortly became Ameriprise, is the entity now today that we all know, with a big focus on financial planning. He wanted to build a field force of young humanities students because he thought that student was moldable and coachable, but also possessed a set of communication skills and the ability to develop interpersonal relationships, and he thought that person would make a better salesman than a quant or some brilliant financial mind. That
My mind just goes straight to what's it's The Big Short.
Every time.
Look at him.
It's
my quant.
Sorry, just choked on my water. It's so true.
Sorry, that's just
His mindset was I could take someone out of business school, some finance background, which are brilliant minds and wonderful people, but he did not see in a job that required a lot of sales and early on building out a book of business.
Yep.
He didn't feel he had much utility for that person if they couldn't go and have a conversation with people and frankly convince people that they needed to do their financial planning and investment business with them.
Sure.
So he thought, I can go find some of these history, poli-sci, English commentators, people that know how to communicate, people that might be able to write, people that are relatable. I can teach them how to be a good financial advisor. It's really not that hard.
Yep.
Our industry has very low barrier to entry.
Yeah. We have all the information
Yeah.
already. Right?
Yeah. So he wanted guys like me. And I went to a career preview. At my father's advice, I bailed on spring break trip to Mexico, which is probably a good thing.
Yep.
And went to Chicago to interview out of the blue with American Express Financial Advisors. Fell in love with the opportunity. I was completely sold by Josh that this was my calling and this is what I wanted to do. And I spent the first 2 years of my career there really cutting my teeth, learning the business, and developing a lot of, I think, skills, experiencing a lot of failure that is with me still today, exactly 20 years later.
Yep.
So that was how I kind of stumbled into this business by accident.
It's amazing.
I don't know that there's much of a path for that.
So like you
today.
you had no interest in financial management when you were, going to school.
I didn't know
what it was.
anything about it. I had very little, even just basic financial acumen or financial literacy. Yeah. It was nothing any of my coursework had anything to do with. I think 20 years ago, graduating from college was very different than it is today. I think the average 18-year-old today heading off to school is probably a lot more mature than your average 18-year-old was 20, 30, 40 years ago, and is almost trained or feels like they have to have some sort of idea what kind of career path they want to pursue. It's one thing. We can have a whole separate podcast on this. I'm a little disenchanted with the state of our current undergraduate curriculums and the lack of evolution, I think, in undergraduate education.
Just on that topic, I'll give you guys a great story about when me and John were at OU. Never forget, we were in an entrepreneurship 300 level class.
Yep.
This might be our junior year. This is like when our business is halfway taking off. We're making money now, just delivering students, anything. And we're in class, and we got this very nice professor, by the way, very nice guy, talking about entrepreneurship. So after the class, we both stayed and like, hey man, we want to pick your brain a little bit, like. We have this business here on campus, like we don't know how to scale anymore, blah, 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 trying to get his advice. And he looks at me and John, we still talk about this. He's like, hey, you guys know more than I do about running a business. I never have. And I'm paying for this class for a guy. And it's like, at what point does like the education system actually go back to educating people and not like, hey, pay for these classes that you're never going to use?
Yep.
Like if I want to learn about anthropology, I'm going to go on YouTube or Google and I'm going to look up stuff I want to look up. I'm not going to pay for a class in college for that, and that's I think what's
pay a lot.
And it's becoming
messed
that's
up.
the thing. It's becoming an insane proposition.
And it's like because back then it's like it wasn't as expensive, so you didn't need to know. Wasn't the end of the world if you didn't know what you're going to do. Now it's like, are you
taking out debt to learn something you don't even care about?
$30,000 a year.
You're never going to
know.
use. And it's like that's why I talk about like I wasn't the smartest guy in school. Like I think I graduated like a 2.2 or 2.3. Like.
I don't even remember.
I don't know how I graduated, but it's like I don't think it's a true testament anymore to like you go to.
What are we measuring?
It's exactly. It's like no, I get it for like a doctor or a lawyer. Like you have to have some level of professional training, and it's like believe me, I've got my brother-in-law is like a lung transplant surgeon. The guy's been to school for 80 years. It feels like so like I want that kind of guy.
I want that guy studying his craft. Yes.
Yeah, it's like but other industries I just don't get it anymore.
It's really hard, and that's why. So part of the thing I'm starting to do some work with the university to mentor students like myself who are history majors, English majors, and talk to them about how they can leverage their skill set to actually pursue a career in business.
Interesting.
And what their value add can be. There's actually a professor at the University of Michigan, Scott Page, doing some really interesting work on collective intelligence and diversity within the workspace. I think we talked about this briefly, John, on the golf course. And it's something that has really resonated with me because I feel like I benefited from 20 years ago a former mentor and boss's belief in that. And I now feel that I not only want to pay it forward to those students who, again, a history major, I don't know what a history major thinks they're going to do after college. Are they going to take the LSAT, teach? I have no idea. but I want to show them that you can absolutely have tremendous value to the workspace. And then I try to practice what I preach in building the team at OCM now. We're doing a lot of hiring, and I truly believe in diversity in the workspace. And diversity comes in all shapes and sizes. You know, a lot of times you think of diversity, you think about race and gender.
It's like what you can see.
Which is important,
right.
Diversity, but there's also diversity of backgrounds, diversity of experiences and ideas that can really benefit, diversity of age, that can really benefit an organization. And that is part of the culture that we're trying to create. And hopefully I can find some brilliant history majors at the University of Michigan who can come work with us one day. So if you're listening.
I mean, it's bold to spend $30,000 a year now and
It's insane.
do a major like that. You're like,
Especially
okay,
with
that might be a specific type of person.
$30,000 if you're going in-state.
Yeah, especially with all the tools and stuff at your disposal as a person now. It's like you have the world at your fingertips whenever you want.
Yep.
And it's like the education system, it's got to change. I mean, it needed to change when you and I were there. 8 years ago, whatever we were there.
It's terribly antiquated. I mean, I can read and write Latin. I spent 6 years of my youth studying it.
Is that making you build a better portfolio?
I don't think it does anything for me. I have terrible grammar and I'm bad at English. So that's the argument for why you study Latin. It makes no sense to me. Why it's not like a state requirement to have some coursework in basic financial literacy is beyond me. We send these 17, 18-year-olds out to the real world. In many cases, ask them to incur a tremendous amount of debt. You have all these predatory firms out there trying to take advantage of, and you have a really uneducated, from a financial literacy standpoint, person. I mean, these kids they're burying themselves. They're digging holes
Literally.
that they will spend their entire life trying to climb out of. For what?
Yeah, I don't even.
Sorry, I know this is getting off the rails here.
No, it's not.
we're
This
on
is
the
the
same
whole.
page.
This is the
That's
whole
the
point.
point.
Yeah, it's like this is just. Yeah, so definitely agree with you here that something's got to change with education.
We just kind of stopped talking about it because I was like, I don't know. It seems like you're actually doing something to improve something. You don't need to make it your whole
At
life's
least giving
work.
back and like.
We haven't done that much. We've done a little bit with some projects and things, but like that's kind of why I just stopped talking about it because I was so frustrated.
Who's deliver that hiring? Where do you go find your typical employee?
It's a good question. Kind of depends on what we're hiring for.
Sure.
Here locally, a lot of it is customer support, and when it comes to sales and tech, we're looking for people that have been in the food industry, that have relationships in the industry. We use Culture Index to filter quite a bit.
Yeah.
That kind of is like the first layer of, okay, we're looking for this type of person for this type of position, and then there's tons of diversity inside of that type of person. Like he's a rainmaker. Well, I know a ton of rainmakers, and they're all completely different. Darian, Joe, people on the floor.
Yeah.
So that to me is, we've started using that this year, and that's been like our first layer to.
Do you recruit on college campuses?
We have one intern. We have Nate started as an intern. I don't think we really do too much.
And how do you think this is going so far? You enjoying your time as an intern?
I am. I'm learning a lot about, I guess, like the corporate side of creativity, which has been super interesting because I've done social media for a very long time. To your point about like the financial situation, I was very fortunate to go to school on full ride.
Incredible.
Good for you.
So many of my friends just like thousands and thousands of dollars in debt, and they had no idea what to do. So when you said that, I was like, this is true.
My wife's still paying off a lot of.
Yeah.
I said we are paying off a lot of debt.
Yeah.
She got her master's from Kent State. Went to Kent, got her master's there, and it's like, they get you hooked on that corporate job, and like you're just a rat in the race at that point, I feel like. And it's like someone's got to step in and help these people better understand money, taxes, compounding interest, what the S&P actually is. It's like that's what people need to educate people on this stuff, because it's like you said, right now it's accessible. Anybody can go start a brokerage account. You don't have to be a certain age or qualification or
For
anything.
free.
Anybody can do this.
It's terrifying. It's terrifying.
It's like literally anybody can do this.
But there's very limited guardrails to prevent folks from really harming themselves too.
Oh yeah, absolutely.
Yeah.
You know, we all saw some of the early struggles that Robinhood had, and some of these platforms with folks that really didn't know what they were doing, or they Google a strategy or they watch a video and now they think they're an expert
day
options
trader.
trader or a day trader, and they're going to lever themselves up, and they're going to and they don't even understand the consequences of what they're doing. That to me is back, bringing this all full circle, is where the AI still is tough, because where's the human element? Where is the person who's going to take responsibility and accountability and ownership of protecting people and making sure that things are being done that are suitable, appropriate, and in someone's best interest? I just don't know how a robot really totally captures that.
I don't think it does. At least not right now. When we got, like I said, artificial general intelligence, when, you know, it can really mimic, we're not even close, at least from my opinion. We're dealing with machine learning, and it's only as smart as the inputs you give it. The model, how much data it's, you know, educated and trained on. But yeah, I mean, if the model doesn't know, like, hey, you know, this person only has X dollars, you know, X discretionary dollars, I probably shouldn't tell him to lever, you know, and, you know, and then trade options with that. You know, I probably shouldn't do that.
So
like,
I would love your guys' opinion on this, because this is something that I think about and I've talked about with a lot of folks. You know, if you go back the last century plus, 2 centuries, with every major big breakthrough in technology or sort of revolution that we've had, whether it was the Industrial Revolution or certain developments, it's led to massive job creation and growth. And businesses have evolved, but a byproduct of that has been a lot of job creation. I don't know that I see that being the case with some of the road that we're heading down with.
It's definitely
with
easier.
AI. I see more job elimination.
It's easier to go down the elimination route. I think you have to think really hard on like what's all created job-wise from it. I don't think we're here to work, but we have to be able to live, and the way we do that here is make money to live and feed yourself. I think this could end up having people focus on things that are more human, more creativity, more beauty, I don't know, things like that. But in the meantime, there's so much pain to get to that point. You still have to work to end up.
Sure.
I don't know. I think there's definitely a lot more job destruction from this than creation.
I don't necessarily agree. I don't. If you look at from the current present tense of what AI, again, we don't have AI. Okay? It doesn't exist right now. We got machine learning. It's very different, 2 different things. When you can when you build artificial general intelligence and you have like it hooked up with something like what Tesla's doing with their robots, you know, you're going to look at a lot of the monotonous jobs out there, the landscaping, the delivery driver, right? Not talking down on anybody here, but it's like you're going to see a lot of those type of things potentially go away. I would assume they're going to go away. And you're going to see a shift of focus towards building and addressing other issues. For example, you know, I don't know if this is by design or not, but like there is a massive homeless crisis. There is a massive housing shortage. There is a massive, you know, food issue here in the United States. Like, by introducing better technologies and streamlining, you know, and this monotonous work, it's like you're going to open up opportunities for other industries to be developed, other problems to be solved. But I will agree with you here. This is a technology that I don't think anybody truly understands, including myself, like the capabilities of it. Like seriously, like I don't think people really understand like what it's going to do to the world. There is going to have to be at some point some level of like basic income or like way to survive, because the world of, you know, artificial intelligence and robotics, it is so much closer than people think, and it will, like I said, it's gonna shift the focus towards other problems
But that's just the pain to get to that point. It's like
you need to, for example, like we got to build more, facilities to produce energy.
Mm-hmm.
It's like you just do that quicker. You got to build a better, road and infrastructure system. You can just do that quicker now. You don't have to worry about, hiring landscapers or people like, when there's a pothole in the road, it gets fixed immediately.
Yep.
It doesn't get, have to wait in line for a crew of people to come out. Like a robot will come out and do it because it knows.
Yeah, no, that's a good point. It's interesting. I remember reading, so my kids are 12, 10, and 9. I think it was after my first child, Eleanor, was born. So this was like 2013. There was a Wall Street Journal article that said something about 80% of jobs that a child born today will have in 25 years not only don't exist currently, but you won't even be able to fathom. And that really resonated. And I started thinking, what is it going to be? But then I thought back and I said, you know what, maybe this isn't unique to this snapshot in time. A lot could probably be said 30 years ago, 20 years ago. Imagine trying to explain to your parents when they're a college student what data mining is and data analytics is, or what an app is, or what, again, a lot of these jobs, not everyone's a doctor, lawyer, an engineer, or these traditional professions that have been around forever. So it's that's where I'm hanging on to hope in that, it's like history doesn't always repeat itself, but it rhymes sort of idea, in that yes, there's a new technology revolution happening now, and it's AI, but the internet was revolutionary.
Yep.
There's been other things that have been revolutionary, and our economy has evolved. New opportunities have presented themselves. New problems, to your point, Aaron, have arisen, and I think that at least one of my children will absolutely have a job that I don't even know what it means today.
I think that's why it's easier to think that this would kill jobs, because you can't even fathom.
Yeah, it could kill jobs. I don't know, but
For sure.
I don't know whether to be super pumped about this technology, scared, both.
As it is right now,
I don't know.
Where it's not AI, I think it's just a helper, and it makes people
Like, I love that I can go open
better.
up a ChatGPT, and I can just say, hey, write this email at this tone for me. Here's what I want to get across. And it's just boop, done. It's like,
and it's really good at taking it like 80% of the way.
It's like, and that is so convenient for someone like me. But it's like, what am I now teaching, showing the model about myself, like my incapabilities as a person, and like what I'm good at, what I'm bad. It's like, I'm given all this information as inputs to this model. And it's like, it's only getting smarter.
Well, I think what it's able to do, though, in giving you back time is remarkable, because we all know the hardest thing to do, whether it's drafting an email from scratch or putting out a note or a memo or whatever you might need to be writing, it's just getting words on a page. Just starting, right? Once you can get it started, though, you can edit, put your slant on it, fine-tune it. But it does eliminate a lot of that pressure of just, where do I start? How do I even begin?
Do you guys get annoyed now? Like, you go on social media, or like, not social media, but like LinkedIn, it's like every post is, ChatGPT generated, and it's like got the emojis on there. It's like, I do dislike the non-authentic.
I can still tell.
It's so easy.
I can tell.
It's clear as day.
I can tell emails. I can tell. I don't know that I've been stumped yet by a ChatGPT generated something. It's not all the way there. It's funny. Have you seen like the meme of or the clip or reel or whatever of for anyone worried about the robots winning or whatever, it shows like a robot playing someone in tic-tac-toe, and it gets 3 X's in a row, but it goes like off the tic-tac-toe grid. It's like, so like, yes, it did get 3 X's in a row, but so it's, again, I still think there's a long way to go, but I think it'll be here before we know it.
Well, awesome. Let's get back to your start here, okay? So you found your footing in Chicago, and it was American Express but Ameriprise, essentially, that's what it was?
Yeah, so I was hired by American Express Financial Advisors in March, by the time I took my Series 7, had moved to Chicago, was all licensed, ready to go, and I showed up the first week of August ready to go. I think my first day was when they IPO'd and were ringing the bell on the exchange as Ameriprise was the new publicly traded entity that was spun out by Amex. It was the former American Express Financial Advisors. So I was hired by American Express Financial Advisors, but never actually worked a day for my life there. It was Ameriprise day one when I showed up.
And what year was this?
That was August of 2005.
Nice.
Would have been 5th grade.
Yeah, August 05. I'm
Yep.
older than I look.
Thank you.
Good problem.
I couldn't tell. But
So it was that was and that was when, you know, there were still a lot of these great traditional firms of yesteryear still out there. And it was an industry that was very much dominated by these big, massive brokerage firms, the UBSs, the Merrill Lynches, the Morgan Stanleys, somewhere where I spent 2 years, Smith Barney, which was a wonderful legacy, again, firm of yesteryear. That was who dominated Wall Street. And if you wanted quality financial advice, access to a great professional, really a robust platform, you had to go to these firms, the Goldmans of the world, the you know, a lot of the large banks. That was who was hiring young folks into the business. That was who was investing in training young folks, and that's where a lot of people felt most comfortable having their money. What I've seen happen in just in 2 decades, but really meaningfully in the last 6, 7, 8 years, is this huge wave and migration towards independent platforms. And in many respects, you can have a little firm like OCM Private Wealth that is not a household name, especially outside of our markets. We're in Cleveland, Columbus, Chicago. We're very much an upper Midwestern footprint. Outside of those markets, we're definitely not a household name. And we can have a more robust platform and access to more opportunities than some of the largest financial institutions in the world, which is, it's pretty wild if you think about it.
It is.
And that's really happened in the last 6 or 7 years.
It's interesting. Yeah, I think to me, I've always been interested in the alt space. I mean, even Bitcoin in college and starting there and seeing the different levels of return that now the stock market gets a little crazy. It moves quite a bit now, but that's what originally drew me to OCM.
Sure. It's like when you're getting tariffed one day and then the next day no tariffs, and then you're tariffed. It's like
it's
so much
funny.
volatility nowadays. Man. I love it.
Our fearless leader, and a lot of some uncertainty in Washington, and what I would just call, you know, a lot of it's background noise, a lot of it's very real policy, whatever it is, and partisanship aside, there is a lot of uncertainty out there, and I think that has also aided investors' interest in diversified, non-correlated assets.
Absolutely.
And it's only aided the conversation around showing clients these alternatives to the point where now most of our client portfolios, clients have anywhere between 15 and 30% exposure to what I would call alts.
Do you think that this alternative space is really getting traction because of how easy it is today? For example, because technology, you can start a business. Anybody can start a business, and you can go viral, or you can get scale very quickly. You can raise funds easier than like. Do you think that the alternative space is erupting because it is easier to take an idea from conception to reality quicker, with less of the corporate, mentality or like the tools that corporate America has? Like,
yeah, I think that's part of it. I also think part of it has to do with just the vastness of private markets compared to, right? I mean, if you look at public markets, the S&P 500, right? That's 500 companies, right? And really, it's 7 of them right now that are driving a third of that index's performance. You look at your average investor who's owning public equities, right? You're talking about a couple dozen names that are probably the most commonly owned and overlapped securities out there. There's not, they trade really tight. There's not a lot of dislocation. There's not a lot of, the private markets though, you're talking about thousands and thousands and thousands and thousands of companies. And it's also a common misconception. People hear private equity or private markets, and they think that's synonymous with more risk. They think that that's these tiny little startups and VC type businesses. That's not true at all. Some of there's massive businesses here doing hundreds and hundreds of millions of dollars of revenue that are private for any myriad of reasons. And so the opportunities in private markets are just so vast, and there's just a lot of opportunity there, whereas your typical public market access is fairly limited, and it's subject to a lot more of the noise.
For sure.
So
even from, the person, the business owner, the actual operator, whoever's trying to raise the money, I would think it'd be much easier now to raise $5 million from 50 people instead of $5 million from one very savvy family office that you're going to have to go pitch them over and over and build a relationship and build trust. And
sure,
you can go on these platforms and here's my real estate deal. If you're interested, do it.
The barriers to entry are so much less. And I think
and there's a lot of smart people who are leaving, brilliant people who are leaving, or frankly never even entering. The gentleman I'm sitting with right now, that public world. And it used to be, you graduate college, you go try to get some job at a large organization, and you put in your time, you work your way up, you retire 35 years later with your pension, and you move to Florida. That's what you did. And now there's just all sorts of entrepreneurs and who are doing really, really interesting things, solving real problems, creating new sorts of opportunities. And with every one of these businesses, as they grow, present really, really compelling investment opportunities, whether it's for direct access, whether they get, whether PE buys them and maybe you're getting access to them through a fund. There's all sorts of ways to get access to investing in these types of companies. And what it turns out, historically speaking, the last 20 years, you're getting about double the return of public markets out of private markets at a reduced risk profile. So it's really, really compelling. And what's shocking to me still is how low advisor adoption, broadly speaking, is.
For sure.
It's coming along. It's getting better, but it is still a widely underallocated space for your average private client, high net worth investor. And the problem is, and what we're trying to address is, if we truly believe in alts, and we do think that it should be a significant allocation within a portfolio for any number of reasons, why are we treating it differently than other asset classes? And here's what I mean. A lot of people, if they are even investing in alts, maybe they've got their broker got them into an Apollo or a Blackstone deal, and they got another deal they've invested in here, and maybe they've invested in a buddy's real estate deal or two, right? But it's not truly diversified access. So you would never have all of your large cap stocks, right? Your equity portion of your portfolio. It wouldn't just be in 2, 3, or 4 stocks. You wouldn't have all your bond fixed income holdings in 2, 3, or 4 bonds. So why do we think it's acceptable to have our alternatives exposure in a small handful of opportunities and not truly diversify that space?
Interesting.
Because now you can.
Yeah, and then this is the evolution of really looking at this other asset class as it's a real opportunity. I just don't think people understand that it is a real opportunity.
Yeah.
I mean, well, I can't say they don't. They definitely do. It's growing.
I think about maybe my parents, and they live down in Florida now. They're just using normal financial advisor. They're interested in the real estate that I'm doing, but they're not actively looking for other things because it's synonymous with risk.
And to be clear, by not having access to alt, you're not harming yourself.
For sure.
Right? It's not like you're a dummy.
Yep.
But I think if you want to optimize performance and outcomes and really build a portfolio that has ideal risk reward characteristics, and frankly can be less correlated, you have to include alternatives in a portfolio
Yeah.
today in this day and age.
On the entrepreneurship route, when did you know you wanted to spin off? And before you spun off, were you a partner?
Yeah, so I spent the last years of what I'll call my corporate career at Fifth Third. I was
Okay.
in their private bank. First 6 years of which was in Chicago. The last 3 were after I moved back to Cleveland. And look, Fifth Third for a regional bank, for a bank, they actually had a pretty solid investment program and platform. I just was not built for corporate America. This is not a knock on Fifth Third or any of the firms out there. I think there's a lot of great firms. Me personally, I was sick of hearing no to good ideas.
That's your profile. Hates rules.
Hates rules. I didn't like hearing no to good ideas. I really struggled with some of the platform limitations, and I frankly wanted to build something and build it the right way that I could be really proud of, work with clients in an environment that was completely void of conflict, and I could truly sit in front of them as an objective advisor and bring them all the solutions that I thought that they would want and should have access to. So again, I'm never going to negative sell. There's a lot of great firms out there. I was not built after 15 years for a corporate environment where decisions were made by someone sitting in an office in another city who didn't know me, didn't know my clients.
Yeah.
And so I knew there was a better way out there. I had seen firsthand other folks in the business I respected who had gone independent and pursued this path, and everyone raved about it. No one seemed unhappy. I didn't see anyone really coming back from it. So I said, there's got to be something to this. And after doing a lot of exploring, I recognized what you could do when you kind of rid yourself of some of those corporate shackles. My biggest fear at the time, I was 35. My biggest fear, 36, sorry. My biggest fear was looking back. I could have done that for another 30 years, retired in my mid-60s, had lived a great life, all along, provided for my family, done all the things, but I couldn't stop thinking about the amount of regret I would have at that point. Looking back, thinking back, what could have been?
Yep.
What could I have built? What could I have created? What could I have owned? And it's not just about the money. The money ends up being wonderful. There's much better economics. There's actual equity. There's ownership. There can be all sorts of paths down the road that you can take this. But for me, it was about what would be rewarding and what would be fulfilling. I was working very little in the way of hours, making really good money, but I felt empty.
Yeah.
And I didn't feel much purpose. And I know, you guys know, when your service provider feels that way, if your boss feels that way in any environment, when someone feels that way, you feel it yourself.
For sure.
And I knew that I had to do something. And that's kind of how I ultimately found my way to independence.
It's a bold move.
Yeah, I mean,
Now, my wife thought I was insane,
Oh,
but
sure she did.
luckily I have her support and implicit trust, and it wouldn't have happened without that.
It's not easy.
what about Northeast Ohio and Cleveland specifically do you love building a business in? Like, is it the people? Like for me, right? Like I've been, all over the place, and I feel like they're the Midwestern values of like working hard, like, it just resonates with me. And to me, it's like the people. That's what gets me energized about.
Because you could still be in Chicago.
You're completely right. We do have an office there. I'm there probably 25 nights a year, and I still have a large portion of my client base there, and frankly, great growth opportunities there that take me there. Being in Cleveland, though, what I've loved about it, it's a couple things. One is it's a city that is Clevelanders just love looking out for and supporting other Clevelanders. I think if someone decides to return home, come home, plant a flag here, invest in this community, become civically engaged and involved, right, raise their family here, I feel like ever since I've been back in town, almost 9 years now, there's just been a wonderful outpouring of support, interest in what I'm up to that I don't think you get in other cities. That's on the business front. I also think Cleveland is a wonderful city for young entrepreneurs, and I'm sure that you guys have seen that as well.
Yep.
What's really, I think it's it's an opportunity in Cleveland, but it's also an issue in Cleveland that I think organizations need to solve for. And I found this when I was talking to a lot of firms when I was looking to leave Fifth Third and go independent. I talked to everybody under the sun, you name it. The common thread was that everyone recognized the need for young talent, especially given the scarcity of young talent.
Yep.
Everyone recognized it was something they wanted, but not everyone knew what to do with it and how to integrate it, how to optimize and get the best value out of that person, and how to really have them contribute in a meaningful way. I think that's probably evolved and changed a little bit over the last 6 or 7 years. It's something we're very much cognizant of and trying to be mindful of as an organization when we are starting to bring on that next generation of advisor and member of our team. So I think it's a great city to be a young entrepreneur, and it's been wonderful. My plug for the city in general, and this is something I tell everybody, it's a wonderful city for a young person to come up in or to return to. I've never seen anywhere like it where at such a young age you can actually get really civically involved and give back and feel like you can make an impact here. If I was still in Chicago, we'd be up in the suburbs. I'm sure we'd have a nice life. I wouldn't feel like I was probably making that much of a difference or an impact. Here in Cleveland, I think it's a wonderful selling point. You can really, really feel like you are making a difference. You can really get involved. You can have just a really, really rewarding and meaningful existence in this city and feel like you have all the support you need to build and grow a business as well.
I agree with that. I think that's really one of the main reasons.
That's my commercial for Cleveland.
I mean, it's pretty good. That was one of the main reasons I got into doing real estate. You can actually see the impact that you're making in the city, and you can make your street nice, and you can make areas better and improve them. So yeah, I agree with that.
Absolutely, and I'm sick of this mindset of Cleveland's too small for that, or Cleveland's not a sophisticated enough city for that, or Cleveland doesn't have the appetite. That's bullshit. Sorry, I don't know if I can swear on here, but that's
no one's even want
that. I'm so tired of that narrative. I'm so sick of it. I go down to Columbus and I see some of the exciting things going on down there. We can have that here too.
For sure.
We can have appetite for certain types of investment and growth and projects, and I think we just need more people to adapt that mindset.
Yeah.
That Cleveland is ripe for it, and we just need leaders and people that have that same conviction and belief. So a lot of what we're trying to do is connect Cleveland and Cleveland investors to coastal opportunities, if you will, and bring opportunities to folks in Cleveland that they're maybe not used to seeing or don't have access to. At the same time, I guess the corollary to that is bringing these folks from the New York and the California markets and even Chicago into Cleveland to see what's going on here, and that there's tremendous opportunity here, a lot of businesses, a lot of individuals worth getting to know, and hopefully getting more eyes on this city, as I think it truly is a diamond in the rough. And there's a lot of great businesses here, a lot of great opportunity, a lot of great investment that can be made. So that's an area where a little firm like ours is trying to punch above our weight.
Yeah.
And so far having a little bit of success.
Yeah, so what you just said honestly resonates with me. It's one of the reasons why John and I get so much energy from talking to entrepreneurs and learning from individuals like yourself, because we just didn't even know this existed in Cleveland. When we started this company in my dorm room, back in 2013 in college, I didn't have any other buddies in college that were building a business.
It was getting people were trying to get us to stop doing it.
Yeah,
Just come
I
drink.
remember, just constantly.
You guys are wasting your time.
Yeah.
Yep. Oh,
And
yeah.
I can't tell you how lonely it felt, graduating college, going back, and you see all your buddies in Chicago and New York City making great money at a great firm, and I'm, sitting in my dad's basement, watching a screen of 5 deliveries going on. This had been like 2016, 2017. It's very mentally,
In
no,
that
it's
freezing cold basement.
And it is challenging that you have to wake up every day and you got to motivate yourself to go out there and fucking build. And I'm serious. And it's like, I could not imagine how much easier that would have been. Not easier, but it'd been a weight off our shoulders if you could have gone this and leveraged someone like yourself. Like, hey man, like I'm trying to build this business. I'm doing X, Y, and Z. Like, what do you think about it? Like, we didn't have that for 10, 11 years.
We only had a handful of people that said like, keep going. And now it's like anyone does anything. It's like, if you just do it long enough, you'll figure it out.
And like
you might not be right with what you're doing today, but like if you keep going, you'll figure out what the right thing is. So you just keep going.
I know that you guys are very active in it and know a lot of these folks, but I feel like Cleveland has this small but mighty and growing entrepreneur community.
For sure.
Where there's this wonderful kinship. And I've just even noticed since going out on my own and starting this, the amount of people who always knew what I did, who always knew where to find me, but we had never really had any sort of professional conversation, who now all of a sudden are poking around and want to know what we're up to.
Yep.
And I think that comes with the respect for the entrepreneur and
no
the
question.
person who took the risk, who bet on themselves, and were trying to build and create something. I think it's a story. It's got much better legs than, just the person working for a giant corporation.
Yeah, absolutely. People get energized. Other people who are doing things get so energized by other people who are doing
Where
things.
did you guys find your entrepreneurial drive? I mean, it took me, frankly, 15 years.
So my brother Dave and I, we started a service business when I was in 3rd grade.
Was it
So-
Hoffman Services?
Hoffman Brothers Services. We're at your service. I was meant to.
I take a picture.
Absolutely, man. We were built to run a service business. Apparently, we were wired to do so.
Seriously.
So, man, to me, and that's always been in my DNA. I feel like I still carry that thing around. Like this is. I made this when I was like literally, I think 3rd grade.
Get it laminated.
I know.
It'll
We have a couple
preserve
more.
better.
We have a couple more copies of these. No, it's like, when I went to school at college, like I wanted to be a surgeon, but not because I wanted to help people. It sounds terrible to say that, because I wanted to make a lot of money. And again, goes back to your college point. Like you go to college, the way the reason why I went to school is I wanted to make money. I wanted to make more money. I didn't. So like when I could connect the dots between like I'm wired to run a business or build a business, and like that's when it kind of really connected with me on like, hey, you're not meant to work for somebody else. You're meant to create something and just work relentlessly, work your ass off to make it happen.
And we both had parents. My dad, when I was born, owned 3 pretzel stores in Philadelphia. My mom basically forced him to get rid of them because they're fucking horrible. And he was a salesman then for First Energy and retired there. But my mom did embroidery. She ended up teaching how to embroider on these giant machines that like made by Brother and HP, and they would hire her and her sister. They were called the Stitching Sisters, and they went to every single state and they taught people how to use these machines. We went on a cruise for it, and I kind of just thought it was normal. But looking back, when we ended up starting a business, I was like, oh, that's clearly, it's in my blood. So I think I grew up with it, and I was always trying to figure out ways to make money.
Cool.
And
I hope it's something that resonates with my children. And I think,
it didn't click for me for a while.
Yeah, I imagine.
Yeah.
I just hope that one day they look back and they find some sort of inspiration from it, or say, hey, that was pretty cool. Dad took a chance. Dad bet on himself, and he built something.
Just that it's an
pretty
option,
cool here.
that you don't have to just follow. You can go do your own thing. Yeah.
Well, we typically like to end these shows with a quick rapid fire, this or that type questions. It's geared towards the city of Cleveland or any or like your industry. So I'm gonna lead this one off, all right? And I'm gonna give you this is a tough one, all right? It's January 1st, 2026. What's the price of Bitcoin? This is not advice.
I'm gonna say I'm going with 120,000.
All right, that's a lot better than I heard last week.
Yep.
We heard 75,000 last week.
All right. Keep in mind, I must fully disclose, I do not own any Bitcoin personally, and I know very little about it, but
I love the
that's my
optimism,
guess.
though.
Yes.
Yep. I think it's going to hit 150, but I don't know January 1st. I think we'll pull back.
Cool.
After we go.
I'm not taking that advice.
Yep. Just hold. We'll keep printing.
I'm more long whiskey barrels, bourbon barrels.
800 to 2400. That's all I heard.
I guess I'll ask the second question too.
Okay.
So you live in Independence right now? Is that where?
Pepper Pike.
Pepper Pike. Okay.
Pepper Pike, East Sider.
I just moved from University Heights
Okay.
last October. If you're gonna go out one place in that area, where are you guys going to eat?
Right now, we spend a lot of our time in Chagrin Falls. You'll likely find us at JoJo's, probably sitting at the bar.
What's the go-to meal there?
They got a great burger, a great penny with like a spicy vodka sauce, or pardon me, rigatoni with the spicy vodka. It's really good.
JoJo's is great.
Add shrimp. JoJo's is good. Flower's my regular hangout. You'll find me there.
Cleveland sports fan.
Die Hard, yes.
If there's one team to win championship, who do you want?
It's Cavs.
Oh,
It's Cavs. I know.
that's the first
You're
one.
the first one that said that.
Yeah.
Yeah. Well, all right.
I mean, obviously, there's going to be a reason.
I'm a season ticket holder. It's the
Another alternative investment.
it's the team.
Really.
You know what Gilbert
Yeah,
said?
the ROI on that though has been tough. I really I love the team. I love the product. It's the team locally that I've chosen to quote unquote invest in. From that standpoint, I think it's the best fan experience. My kids love it. It's an exciting team. Nick Barledge, our current CEO, is a good buddy of mine. That's added an element of excitement to it, and
You guys have some good seats, I think, right?
they're fun seats. Yeah.
Oh, yeah.
We'd love to have you come out anytime. So yeah, it's
This is the seats that Joe hit you up about.
I'm glad I just passed on that.
Oh, yeah.
yeah, we just renewed the seats too. So
Oh,
yeah,
shit.
they're someone's got to afford Donovan's new contract, I guess. But no, it's just a great product. So I'd love to be there for that. Obviously, either of the other two teams would be wonderful. But
Sure. We'll take it.
I'm voting with my wallet, I guess.
Yeah. It's a good way to do it.
I don't know, man. The Browns are just exhausting.
Do. You just squeak one out before they move.
Wait till like the last week of August, and I'm gonna be like, come on.
Oh, yeah.
Yeah, that's a tough one. I love the Browns for better or worse. I think being a Michigan football fan and spending a lot of Saturdays in Ann Arbor is just why I'm a little less engaged.
Yeah.
With the Brownies right now, but we have a lot of quarterbacks, so.
Bet you loved our.
We'll see how
Bet you loved our first round draft pick too. He's a Michigan guy.
Yeah, that was a good one. That was, I think, I feel good about that. So, no more comments.
Yep.
On the
All right,
Browns.
I'm gonna ask you one more question, and then this will be the last one for me. What's the best piece of advice you've received as an entrepreneur? And this could be like a book to read, or a saying, or anything that's gotten you through a tough time. Like, is there anything that comes to mind?
As far as getting through a tough time, not necessarily. Really, just staying focused. But one of my best pieces of advice that I love and I live every day is to think big and think boldly. And I guess ask yourself, why not?
Mm-hmm.
I love that.
Not why.
I love that.
And these are things that I incessantly repeat to my children, to our team. I talk with my other two partners, Ryan and Jason, about it, and we really want that to be our mantra. I just like Cleveland, I don't want anyone to tell me that OCM can't do that, and in fact, I want to show our industry the way.
Yep.
By thinking big, thinking boldly, punching above our weight. And some days we pinch ourselves, we feel like we have imposter syndrome.
Mm-hmm.
But as long as it continues to remain more fun and exciting and challenging in a good way than it does scary and intimidating, we're gonna keep pressing on.
I love it. Yeah, I mean, same thing with us, with DoorDash and Uber, and we could still play in this market just
Absolutely.
fine. You know,
Absolutely. So
what's your number one problem right now with your business?
Fast growth. We're wearing, myself and my partners, we're wearing a lot of hats. We're running 1,000,000 miles an hour, whether it's new client, new asset growth, pursuing new opportunities, opening new offices, looking at alternative deals and opportunities, opening new market. I mean, it's a lot, and it's just trying to juggle it all and stay focused. And we're spread a little thin. I'm spending more time on the road than I'd like. Apologies to my family if you ever end up listening to this.
Mainly developing business.
Yeah, whether it's
Deals
it's
or-
recruiting, prospect opportunities, diligencing deal opportunities, networking, relationship building.
Yep.
Again, opening new markets. I'm spending more time on the road than I'd like right now, and that's taxing. It takes its toll, right? I don't know if you guys have to travel much.
Used to.
It's and it just gets harder as you get older, and the kids are getting older, and you don't want to miss things. And it's one thing when your kids are little or you don't have them and you're just disappointing your wife.
Yep.
That you can deal with. She's probably already mad at you about something else already anyway. And but when you're 10, 12, 9-year-old kids are saying, "No, you're leaving again," or "Where are you going?" or "Why?" or you're missing something that's important to them.
Yep.
That becomes tough. But look, it's part of the sacrifice, and you just hope that it's all means to an end. But right now we're busy and we're doing a lot, and it's really just trying to stay focused and make sure that important things aren't getting neglected. So time management has become more important and a bigger focus of mine than it historically has been.
Yeah. Good problems.
They're great problems, and you know what? I'm 42 years old. I'm here to work. I'm here to grind.
Yep.
I got a little runway left.
It's awesome.
I respect that.
It's awesome.
I really do.
Thank you.
Really enjoyed the conversation. I mean, this was one of the better ones. Hopefully we can have you on again, okay?
I'd love to. Thank you guys. This has been awesome.